So in this video, we will start with Chapter 4. Chapter 4 is completing the accounting cycle. Completing the accounting cycle. The learning objectives for Chapter 4 are: prepare the financial statements, including the classified balance sheet. 2, use the worksheet to prepare financial statements. 3, explain the purpose of, journalize, and post-closing entries. 4, prepare the post-closing trial balance. 5, describe the accounting cycle. 6, use the current ratio to evaluate business performance. And 7, explain the purpose of, journalize, and post reversing entries. Let's begin with learning objective 4.1. Prepare the financial statements, including the classified balance sheet. After the adjusted trial balance is prepared, it is time to prepare the financial statements. So the financial statements are prepared in the following order: the income statement, statement of owner's equity, and then the balance sheet. The income statement, it reports revenues and expenses and calculate net income or net loss for the time period. The statement of owner's equity shows how owner's equity changed during the period due to the owner contributions, net income or net loss, and owner withdrawals. The balance sheet, it reports assets, liabilities, and stockholders' equity as of the last day of the period. The financial statements will be prepared from the adjusted trial balance. Each account on the adjusted trial balance will be used on only one financial statement, except Bright Capital, which appears on the statement of owner's equity and the balance sheet. Again, each account on the adjusted trial balance will be used on only one financial statement, except Bright Capital, which appears on the statement of owner's equity and the balance sheet. Net income from the income statement increases owner's capital. A net loss decreases owner's capital. Ending owner capital goes to the balance sheet and makes total liabilities plus owner's equity equal total assets, satisfying the accounting equation. Remember, the accounting equation is assets equal liabilities plus equity. So this is illustrated on the next 3 slides with exhibit F4.2. We always prepare the income statement first. The net income or net loss from the income statement will flow to the statement of owner's equity. Here you see is an example of the income statement for Smart Touch Learning, 2 months ended December 31st, 2024. And you see here that the net income of $85.50 will transfer to the statement of owner's equity. Here you see the statement of owner's equity for Smart Touch Learning. Remember in the previous slide, we said that the net income, which is at $8,550, it transfers to the statement of owner's equity. So here's that amount, okay? Now, the ending value, the $51,550, the ending value of Bright Capital flows from the statement of owner's equity to the balance sheet. You will see this amount, the ending value, on the balance sheet. And here is an example of the balance sheet for a Smart Touch Learning. So the ending value of Bright Capital from the statement of owner's equity is reported on the balance sheet. Smart Touch Learning's balance sheet that you see here lists the assets on the left side and the liabilities and the owner equity on the right side. Assets equal liabilities plus owner's equity. You see the assets total is $113,550 and liabilities is $62,000. Capital is $51,550. When you add these two, you get that amount of $113,550. So they are in balance. A classified balance sheet is a balance sheet that places each asset and each liability into a specific category such as current or long-term. Liquidity is a measure of how quickly an item can be converted to cash because cash is the most liquid asset. Accounts receivable are relatively liquid because receivables are collected quickly. Office supplies are less liquid, and furniture and buildings are even less. So because they take longer to convert to cash or to be used up. A current asset is an asset that is expected to be converted to cash, sold or used up within the next 12 months, or within the business's normal operating cycle if the cycle is longer than a year. The operating cycle is the time span during which cash is paid for goods and services, which are then sold to customers from whom the business collects cash. Long-term assets are assets that will not be converted to cash or used up within the business operating cycle or 1 year, whichever is greater. A long-term investment is an investment in bonds, that's debt securities, or stocks, equity securities, in which the company intends to hold the investment for longer than 1 year. Plant assets are long-lived. Tangible assets such as land, buildings, and equipment used in the operations of a business. An intangible asset is an asset with no physical form that is valuable because of the special rights it carries. A current liability is a liability that must be paid with cash or with goods and services within 1 year or within the entity's operating cycle if the cycle is longer than a year. A long-term liability is a liability that does not need to be paid within 1 year or within the entity's operating cycle, whichever is longer. Owner's equity represents the owner's claims to the assets of the business. The owner's equity section reported on the balance sheet is a part transferred from the ending owner capital balance on the statement of owner's equity. The equity balance also reflects the owner's contributions, net income or net loss of the business, and owner's withdrawals. It represents the amount of assets left over after the business has paid its liabilities. Here is an example of a classified balance sheet. So the classified balance sheet includes categories for current assets, current liabilities, long-term liabilities. So the balance sheet that you see here is being presented in the report form, which lists the assets at the top and liabilities and stockholders' equity below. Now, this report form is more popular in practice than the account form that's shown in the previous Exhibit 4-2. And here we're going to Learning Objective 4.2. Use the worksheet to prepare financial statements. Use the worksheet to prepare financial statements. So the income statement section includes only revenue and expense accounts. The revenues and expenses from the adjusted trial balance section will be transferred into the appropriate column in the income statement section. The balance statement section includes the asset and liability accounts and all equity accounts except revenues and expenses. The balance of each of these accounts will be transferred from the adjusted trial balance section of the worksheet to the appropriate column in the balance sheet section. Compute net income or net loss as total revenues minus total expenses. So you enter net income or the net loss as the balancing amount in the income statement and balance sheet sections. Now, if net income exists, the balance will be entered in the debit column of the income statement section and the credit column of the balance sheet section. Now, if there's a net loss, the balance will be entered in the credit column of the income statement section and the debit column of the balance sheet section. Here you see the net income adjustment in the debit column of the income statement section and the adjustment in the balance sheet section as a credit. Okay, here we are at the end of objectives 1 and 2. So in 1, we prepared the financial statements, including the classified balance sheet. And 2, Use the worksheet to prepare financial statements. We will start with learning objective 4.3 in the next video. So 4.3 will cover the explanation of the purpose of journalize and posting closing entries.